Good morning. Good morning. Welcome, welcome, welcome.
Hello, good morning.
Good morning. Welcome on this wonderful Wednesday morning. We're just going to give everybody a chance to come on in and then we will get started. So, welcome, welcome, welcome.
Good morning.
Good morning.
How are you?
Sleepy?
Okay. Well, you get a couple of more seconds to wake up.
I'm going to splash this water in my face in a minute.
And we want to hear the water.
We're going to get started at 9:05. We're going to give everybody just a few more minutes to come on in and then we will get started.
Okay.
All right, we're just going to give it a couple more minutes, 2 more minutes. We're going to start at 9:05. Good morning, good morning, good morning. All right, good morning, good morning. Welcome, welcome, welcome to the Urban League of Greater Atlanta, TEC, Entrepreneurship Center's Power Hour. We've got some great, great information. Today, for those who know me, know that I'm a big proponent of making sure your financials are in order. And a big, big, big part of your financials being ordered is making sure your taxes are straight. Taxes is not one of those kind of things you want to wait till the last minute, then try to fix because it's going to cost you a whole lot more money. Think about that. If you don't get your oil change, you don't get your oil change. Next thing you know, you're gonna have to end up getting a whole new engine because you chose to, instead of getting little $50 oil changes every few months, you decided you were just gonna let it do what it do. Now you got this humongous problem and you got to get a new engine or a whole new car. So we got to make sure we don't wait till the last minute to do our taxes, where it's going to be a whole lot more expensive and a whole lot more stress and trouble. So we want to make sure we are doing it consistently and keeping up with the things we need to keep up with. So we have a great, phenomenal, amazing young lady that's going to be coming to talk to us about that. And this is Miss Eve Dennis, and she's going to be talking and telling us about our business taxes. Mark, you gonna play the video before we get started?
No, go ahead.
Okay.
It's go-
All right.
uh,
So I'm gonna go ahead, Miss Eve. I'm gonna turn it over to you, and educate these folks, educate
I
them.
love it. I love it. Well, hey, beautiful people, great day. I hope everyone is feeling in their best energy today. It's a little gloomy here, but we can be a ray of sunshine, I think, for ourselves just today. While we fill in for the sun. I'm about to share my screen. You guys let me know when you see it. Okay, we're playing
Yes, ma'am.
lovely, lovely. Let me make it bigger. Mm. Let's see. All right. So business taxes are predictable. I love that John led with, not waiting to the last minute because honestly, that is something all of us done. I know before I even got into the tax industry, I would wait to the last minute to pretty much prepare. Prior to becoming a business owner, I worked in a company and I would go exempt most of the year. And then when tax time came around, I was in pure panic and pandemonium. So just understanding that business taxes and everything is more realistic and easier to conquer when you plan for it is going to be the most important component. So business taxes are predictable when you understand. And I am the owner of a firm called the Sector of Collectives, where I specialize with working with small business owners. But let's get into it. So, all right. So one thing we want to remember is the big three. Business taxes aren't as confusing as we think. We got to realize that they are layered. And when I say layered, I mean, let's go back here. Got a excited little situation here. So we have three components of business taxes. Let's go back. Here. Let's go. All right, so let me backtrack. So today we're going to understand just our tax obligations. So the types of business taxes, what triggers each one, the common pitfalls, and how to avoid them. And then of course, I'm gonna give you guys some tools and some resources that you can utilize to help you navigate the space. Now, as I was explaining, there are three types of taxes that we want to be concerned with. The first is federal, and we know that one the most because it's the IRS, and that's based on profit and employment. Then we have state. So where we reside, that's the state level income and then sales tax obligations that we all have, as well as our local, which is the business taxes and the property tax that we are all responsible for. All right. Now, Income tax is the biggest thing. It's tax season now. So I know us as business owners, y'all are like, oh my gosh. If you didn't properly prepare or you hadn't been talking to your tax strategist or accountant throughout the year. So we're just gonna break it down. What is income taxes? Income taxes is just tax on net profits. So your revenue, meaning the money that you've earned minus your expenses. All right. Who pays for it? All for-profit business owners pay for it. Now, the popular pitfalls of income taxes for us as small business owners is one, no bookkeeping. Two, confusing revenue with profit. And when we say confusing revenue with profit, we want to lean into understanding that our revenue is not the same as our profit. That revenue is what we've earned minus our expenses. And after we have deciphered all these expenses that we've used to cover our business, what's left over is our profit. All right. So that's what we're paying taxes on. The next pitfall is not saving for taxes. So we want to make sure as much as we can, just checking in with ourselves each quarter and seeing how much revenue we are generating. And then the fourth pitfall is waiting until April. Whew, the level of stress and anxiety I hear from small business owners because we allow it to creep up on us. Now, we can avoid these pitfalls by making sure we, one, have monthly bookkeeping, and we learned a little bit about that last week, quarterly profit reviews, and then separate tax savings accounts. That is the biggest game changer for me. Just as a business owner, separating the money, not seeing it, you guys, it is a life changer. Next, sales and use tax. So this is tax collected on taxable goods and services. Who pays for it? All for-profit business owners. All right, what are our pitfalls with sales and use tax? Spending or not collecting sales tax. I know I have been a person, and I don't know, you guys let me know if you've done this too, where you've had a particular client or customer that you want to service and you use Stripe or you collect the payment from them and you do not add sales tax. Drop some twos in the chat if any of that is you. Is that you? Is that anybody in here where you're like, oh, I don't want them to have to pay that tax because they're complaining, or they tell you, hey, I don't want to have to pay that and these of that nature. It doesn't help you. It doesn't help you. So remember and think about beforehand, making sure to collect those sales taxes. Also, not registering. That's a lot of things that us as business owners forget to do. Registering to make sure that we're collecting the sales tax, as well as incorrect tax rates. So some of us go a step further and we take the taxes, but we may misunderstand where we reside and where we're reporting our taxes and how much taxes we need to collect. All right. And then lastly, ignoring the use tax. A lot of us do. A lot of us ignore the use tax because we think it don't apply to us, but certain business models and principles within certain companies are responsible for use tax. Now, how can we avoid this? Separate sales tax holding accounts. Y'all going to see this a lot because the game changer with regards to taxes being predictable is understanding that we have to plan for it. And the best way to plan for it is to separate it. Separate it from the money. If you can create separate accounts that speak solely to taxes, that's going to be your strongest strategy because you know that this money is being put somewhere separate from your operating costs and other things that you need to run your business or just your day-to-day life. All right, quarterly reconciliation. So making sure quarterly, hey, I grossed this amount of money. I had these amount of products sold. How much sales tax should I be putting aside based on the revenue that I have generated? And then last but not least, verifying taxability. So previously I mentioned to you guys that some people ignore the use tax, just wondering and researching or connecting with your CPA, connecting with your tax strategist, whether or not these products I have are actually, products that I need to add use tax to. All right. The next one, self-employment taxes. Whew. This is the one that drives us all crazy, just depending on how our business structure is. Now, self-employment tax is Social Security and Medicare for the business owners. All right, who's paying for it? Whether you are sole proprietorship or LLC, you're still paying for it. Whether you're partners or you're an active LLC member, we're all paying for it. What are our pitfalls? Forgetting that it exists. We do that. We so busy making money throughout the year and doing what it takes to run the business. Once again, we don't plan for it. And when that time comes around, oh my God, that 15.3% drives us crazy. Only saving for the income tax percentage. So that percentage that we pay on our revenue is a little bit different from what we pay on self-employment tax. And then also no quarterly payments. Quarterly payments, once again, we want to check if it's quarter one, how much revenue did we gross? Based on the revenue that we grossed, this is the percentage of taxes that you want to put aside. Normally, if we are a sole proprietorship, a partner, or active member LLC, you want to put aside 25 to 30% of what you grossed in that quarter. All right. Quarterly projections. I have learned that when I really write it down and make it plain and project how many relationships I want to be a solution for, how many products I want to be able to help others connect with and have a solution for, that you can realistically prepare saying, hey, I'm going to gross $10,000 this month or this quarter. With preparing for that, you're able to prepare and say, hey, I'm going to put aside this amount of money for this. Now, if you don't meet the 10K, you've been actively planning to put aside this money. So it makes it a lot easier when you check that savings account and see more money in that account so that you can pay that quarter. All right, next is payroll taxes. Now, who is responsible for payroll taxes? Businesses with employees. Now, payroll, you guys, it's bittersweet sometimes in the small business community because it comes with a few extra steps, but it has a lot of benefits. Currently, when we are thinking about payroll taxes, our pitfalls are not running payroll correctly, because as the business owner, sometimes we do a lot of stuff by ourselves and we use YouTube University and a lot of other resources that don't really give us all of the support we need to be able to understand how and when and what we need to include in payroll taxes. We also have a pitfall with not paying the workers correctly. And then last but not least, the biggest one, and some of us might have experienced it, those late 1099s and reporting the income late. That is a big pitfall for us as small business owners. Now, what are the ways you can avoid it? By using payroll software, or our favorite one is paying someone else to do it. You know what your strengths are. You know what you are solid and good at, and you know what you understand. Lean into that. Pay somebody else to do it so that you can assure that it's done correctly. Now, a lot of us in our business journey, we don't understand the difference between employees and contractor rules. So taking the time to understand that will help us a lot with understanding if we need to pay payroll taxes or not. And then once again, you guys are going to see it a lot from me. Separate tax savings account. The payroll taxes, keep it in a separate account based on how many employees you have. If you are an S Corp and you are a single member, then you know it's just you. If you have multiple employees, then you want to prepare for as many employees that you have. And let me know if you guys have any questions. I would like it to be a dialogue because we all gotta kind of be familiar with all of these components. Now, leaning into estimated quarterly taxes. I mentioned it a lot. So to guide and better, I guess, make it clear, each quarter we got to pay taxes if we're aiming to plan for it and not let it sneak up on us. Q1, it's January 1st through March 31st. So April 15th is when we want to pay for Q1. And that's the one we know the most, April 15th. Now Q2, it starts April 1st through May 31st. And that's typically due on June 15th. Q3 is June 1st through August 31st. And that's due September 15th. And then we have Q4, which is September 1st through December 31st. And that's due by January 15th. Now, we want to keep in mind that these dates are put in place for us. However, if they fall on the weekend, then it's typically the next following business day. But that just helps us create a period where we're able to check and see how much revenue we're grossing. Tracking that revenue is going to be the biggest thing. How many expenses do we have for this quarter? And then making sure that revenue minus expenses guides us and shows us exactly what that profit is, so we know how much taxes we need to pay on that profit. Now, our pitfalls is paying nothing until the end of the year, and that's a lot of us sometimes. Underestimating our profit. Sometimes when we're using Stripe and we're using merchant services, we don't really take the time to sign in to see how much money I've been collecting. So when you get that 1099K, you're like, oh, Lord, I made this amount of money. I did this. And you're kind of in reactive mode. You're like, oh no, what do I do? But you want to check in with yourself, pay attention to your business, because it helps you project and see exactly how you can reach your goals financially. And through understanding how you can reach your goals financially, you'll be able to also pay closer attention to the revenue that you're generating so that you can pay taxes on that each quarter. And then, of course, just, avoiding it is the quarterly reviews and then automatic transfers. That's something else that I have made myself do. Automatic transfers. Move that money before you see it. Because I know that works better for a lot of us. Not being able to see it, it's gone. Move it. Get it out of here. Because I know that'll be something that's more beneficial for you. So that's good. All right, so now we lean into business structures, because the business structures are really what helps us understand more about our tax liabilities, and it puts us in the best position to win depending on what the business structure is. So if you are a sole proprietorship or a single member LLC, of course, it's the simplest form, and that's normally how we get our foot in the door, entrepreneurship. We just start doing it, right? But with that, you have to understand that you're going to report your income directly with your tax return. So when you get your tax return from your tax accountant or your tax strategist, your CPA, you're going to see a 1040, which is the individual information, your personal information. And then you're going to see a profit and loss schedule. That profit and loss schedule, all of that is one tax return. So everything is reported directly, no separate entity. Okay. Now, when we are set up as a sole proprietorship or single member LLC, we're paying those levels, those layers of tax that I introduced in the beginning. So as a LLC, single member and sole proprietorship, we're paying the income tax on the profit, the self-employment tax, and then estimated quarterly taxes. All right. So those are our big three for LLCs and sole proprietorships. Now for the state, we have to knock out the state income tax and then also prepare for those estimated payments. What are the big risks with us being structured in this way? It's no separation between the owner and the business taxes. And then we have a high exposure to self-employment tax, because however much revenue you grossed minus those expenses is what you're paying 15.3% taxes on. Now, what is the game changer? The game changer is saving a 25 to 30% profit, monthly bookkeeping, and then depending on where your revenue is. Like if you're consistently generating 75 to 6 figures in your business, you might want to think about a different structure for strategy, like the S Corp, but that's only when your profit supports it. Now let's lean into the partnerships, because the partnerships, they're normally categorized as multi-member LLCs or just a general partnership. They're very similar. It's just all about how you set it up with the state. And your tax liability is a little bit different. So you got an extra step. You got to file something separate from you. So previously I mentioned, hey, when you're an individual, you're going to file a 1040. We all see that. When we get our tax documents, that's that first document that we see. And we do file that. However, as a partnership, you have one more other space that you have to file, a new form, and it's called a 1065. So if your tax person asks you, if you're a partnership, you want to let them know that you're filing a 1065 and that you have to get your K1s. Now, the K1 is how you're able to take that revenue that you and your partner generated through the business, and then you'll pay income tax, or as an active partner, you're going to pay self-employment tax. All right. So 1065, that's where we start. If you're a partnership, you cannot file your individual tax return without filing a 1065, because you'll be missing the revenue that you generated, well, the profit that you generated from the 1065 on your personal 1040 tax return. So you want 1065, then you're going to get a K1, and then you're going to file on your tax return, which is the 1040. All right. Now with the state, we are going to file the partnership, which is the 1065. And then of course, any income that is passed down from the 1065 onto your K1 that you'll be reporting with your 1040 tax return. What are our major risks with partnerships? Partners owe tax even if no cash was distributed. That's the downside with that. Y'all both paying something. All right. Now, the game changer is making sure you have an operating agreement. A lot of times in our community, we don't lean into contracts or operating agreements because we talked about it. Talking about it is not going to hold up in the audit. So you want to make sure that it's clear. Hey, I get 70%, I do 30%, or I do 50%, you do 50%, or you have 60%, I have 40%. Y'all want to put it down in paper and writing, because that is how you are able to say, hey, I'm only supposed to pay 60% on this or 40% on this. All right. And then another thing that you want to encourage with partnerships is having meetings where you guys can talk about partner tax planning. It's all in the preparation. Everything is in the preparation. So you guys are operating as partners. I'm pretty sure hopefully y'all talk on a regular basis. And if y'all do, let's plan for these taxes. Let's plan on what we're investing in. Let's plan to make sure that we're all breaking even. And with that, we have the separate tax savings per partner. So one of the online bank resources that I'm familiar with is Lily. And Lily gives you that flexibility to, if you guys are in different, maybe your partner travels a lot and it's hard to get them in one place so y'all can go into branch and get an account created with you guys. Lily has the flexibility where you can create multiple accounts amongst partners, put, what your percentages are between the partners, and then from there, you can have separate savings account per partner. So always wanting to know of different things to make it easier because, life's all the time, but you want to prepare for what's next. All right, now, this is what I was telling you guys about when y'all in the LLC and y'all starting to generate more revenue consistently, 75 to 6 figures. The S corporation. Now, the S corporation is, you could pretty much, as an LLC or a corporation, you are basically communicating with the IRS and with the state saying, tax me with the S corp status. You're just communicating a different taxation. All right. Now you will still have pass-through income. It's separate now. So the S Corp is the 1120S form that you will file, and that's completely separate from your 1040 form. All right. Now, when you decide you're ready to become an S Corp, you're going to file 1120S and you're going to put yourself on payroll. Like, what? I stopped working corporate to put myself on payroll. You sure did. Because with that payroll strategy, it's a highlight for you. It's saying, as long as you make sure you take a reasonable salary, and standardly reasonable salaries are 70-30 splits, 60-40 splits based on how much revenue and profit your business is generating. All right, you're going to take a salary depending on, what it is you do for your business. Always consider that. You got to sit down with yourself, say, self, we sitting down, we're going to coffee, we're going, out to eat. We're going to have this one meeting and we're going to break down all of these things. I'm going to decide what I do for my business and then decide a reasonable salary. Because when you decide that, you have to put yourself on payroll in order for this structure to really be the strategy that it is. Once you do that, you will pay payroll taxes, yes. However, it's going to be way better than you grossing $200,000, $300,000 in revenue and you paying 15.3%. Trust me. Now, a highlight about this structure is you get to take advantage of distributions. Now, distributions, you want to have a log. There are some things you just got to do. If you really want to win with our tax code, you got to plan and you got to document. So with distributions, even though they're not subject to self-employment taxes, you got to write down what you're doing and why you're doing it and how much it costs and how much you spent and when you did it. All about documentation. So moving through that, we understand that with the state, we're going to have income that passes through to the owner. So I'm going to back it up just a little bit because I did not mention that to you guys. So when we are filing our 1120S tax return for our business, which is separate from our 1040 for ourselves, we get a K1 once again, almost like the partnership. So the K1 is going to be passed through income that is sent to you for you to pay the ordinary taxes on it. It's not the same as self-employment taxes. It's ordinary taxes. So it's a little bit different, not as much, but it's way better than you paying 15.3% on all the revenue that your business grossed.
Someone has their hand raised, Sonia
Oh, I
Felton.
think you see it. Hey, Sonia.
Hello, would you please put in the chat or somewhere the website that you were talking about with Lily? Because when I just tried to do a search, a lot of things came up. So it's all in the spelling, so I appreciate that. Thank you.
Absolutely. No, absolutely. So I created a reference guide for you guys. I give y'all everything that I talk about. And I'm gonna make sure you get it towards the end. But I'll definitely make sure you got it. Now, what are the game changers with this structure? The game changers with this structure is that you have to pay a compliant salary. A lot of times we get spoiled asking for that taxation and seeing how it's a strategy you're going to absolutely love, but we don't put ourselves in a compliant salary. We don't prioritize it. But if we do, it's a game changer. The separate salary plus the distribution. So yes, you might put that your salary is this, but granted that there are certain things that you might have to do a distribution from. And it does not require you to pay self-employment taxes. So that's a big game changer. And then the last one is making sure to get payroll software or get somebody else to do it. Y'all, we have to get to a point in our businesses where we can delegate responsibility in areas that we are not strong. Payroll for us sometimes is a weak point because we're new to it. So feel comfortable in getting somebody else to do it, okay? Moving on along. Corporations. Now, corporations is a complete separate taxable entity. And federally, we pay corporate income taxes. They'll knock your head off. Owner tax on the dividends. So you get dividends from the corporation that you are taxed on. And unfortunately, it is double taxation. We get hit with the double whammy. I hate to tell you guys that, but that's what happened with corporations. It's a lot of benefits in corporation. However, if we are looking for the best strategies to avoid taxation, the corporation is not it, because we can sometimes be subject to double taxation. Now, in the state, you pay a corporate income tax, and then you pay a corporate net worth tax. So once again, the major risk is double taxation and then poor salary planning. What are our game changers for the corporation business structure? Making sure that we are strategic with our salaries, reinvesting our profits intentionally. That adds to the strategy for our salaries, and then maintaining corporate formalities. There are a lot of rules that we have to adhere by when we decide to become a corporation. And sometimes, because it's so many, we forget and we get big penalties and big fines. So you really got to make sure that you get somebody else to do it and get your ducks in a row when you decide to become a corporation. Nonprofit. Oh yeah, nonprofit, that 501c3. Now it is a tax exempt organization approved by the IRS. However, we do have to file a 990 annually. So there are different versions of the 990. If you're grossing under 20,000, there's a 990N that you report under the IRS, and it's free. Now, when you're needing to file any 990 short or long forms, those typically require you to have a tax accountant in place or a CPA in place to support you if you don't have access to professional accounting software, but you still got to make sure you're filing. Now, sometimes you can owe unrelated business income tax. It's rare, it doesn't happen often, but we want to be aware of it because you can owe it. The compliance part is the biggest part because you apply and you do a couple of things to become a nonprofit. It's not, a complete walk in the park. However, to get that a compliant, to get this structure, you want to make sure that one, you do annual registration, and then two, make sure you're doing charitable registration if you're fundraising. Now, with the state, payroll tax does apply if there are employees of the nonprofit. And then we have sales tax exemption that has to get approved. It has to. What are major risks? Assuming that because you are tax exempt, you don't file. You still have to file. You have to file it. Now, what are our game changers? Making sure that we file the 990, making sure that we have transparent books. Now, if you don't do nothing else and you don't remember nothing else I tell you, can't play around with the nonprofit. You have to document everything. And I guess I will be redundant in saying that you got to do that for everyone. But for the nonprofit structure, you really want to document everything and separate restricted funds. You guys are going to see that that's the pattern. Pattern is documentation and separating the money because life lies and we will dip and move and pull from things that we shouldn't. So separate the money so you don't even see it. All right. Now, what we're going to do is just recap because I know we went through a lot of different structures, but I'm going to make it as easy as possible so you can remember what the biggest mistakes are based on the structures. Now, when it's a sole proprietorship or a single member LLC, our shortcoming and what keeps us donating money to the IRS is no quarterly payments and poor documentation. With the partnerships, what keeps us donating money to the IRS? No tax planning between partners and documentation. For S corps, what keeps us donating money to the IRS? No payroll, incorrect salaries, and poor documentation. With the C corp, not understanding double taxation and poor documentation. Nonprofit, missing Form 990 forms, and y'all guessed it, no documentation. That is what keeps us donating money to the IRS. We don't document it. So therefore, when we get with our tax lady, tax accountant, they sitting there looking at us, we sitting there looking at them. They sitting there looking at us, we sitting there looking at them. They telling us what we owe because we didn't document to keep us from donating, because that's what we doing. When we don't document, we donate money to the IRS. All right. Now, the structures, they do matter. They do help and also affect our tax obligations, and it influences funding and our compliance needs. All right. Now, here are some systems that are going to help you reduce the mistakes and keep you from donating money to the IRS. If you don't remember anything else, if you don't document and choose the structure that best fits you, you're donating money to the IRS. It's a donation. They got their cup out and they coming to a wallet near yours or a bank account. They coming and they're going to get it. So what you want to do monthly is capture. When I say capture, I mean take time to look through your phone. If you took a picture of a receipt that you forgot to, check it out. If you put a receipt in your receipt box, because I still got clients that do that, I'm still happy that you do it. But if you took a receipt and put it in your receipt box, capture it, categorize it, and reconcile it. Meaning, we just gonna go through, okay, this was office supplies. This was me getting continuing education. This was for a business license. This was me going to this client house. I started here, I ended here. Taking the time to sit down. I hate that I'm telling y'all monthly because I really I want you to take the time to do it weekly. On your slow day, may it be a Saturday morning, sit down and just see, what did I do this week for my business? 9 times out of 10, you did so much for your business and forgot to document it. So just think about it. You can make notes in your phone. You can drop some voice notes. Okay, this week I went and saw 3 clients 3 times a week. I documented this address. You just want to get in the habit of documenting. If you don't document, you're donating money. And why would we do that? Why would we do that? Now, quarterly strategy reviews are important as well, because if we're collecting on merchant accounts like Stripe and stuff like that, we don't see it as much. So when we don't see it as much, we want to do a profit check. So as you get into that habit of seeing what you did weekly with your business, how much you grossed, how much you spent. Now take that, what you grossed, what you earned, and subtract it by what you spent in your expenses for your business. What was our profit? Let's profit check ourselves. And when we have that profit check, let's estimate. Now, y'all, I'm keeping y'all honest with the 25 to 30%. I'm keeping y'all honest. However, I just want you to get in the habit of preparing. Payroll review. Now, that's not all of us. We don't have to worry about it, but you do want to do a payroll review. And you guys, when you get somebody else to do it, you're going to get a payroll review every week when you get someone else to do it. So as you allow yourself to transition and open up your thought process to documenting so you don't donate, document so you don't donate, okay, to the IRS. Now, if y'all like donating to the IRS, I'm grateful. We all are. However, you don't have to donate as much if we find a system that works for us. All right. Now, maximize your deductions. Maximize them. But you got to document. I know y'all tired of me saying it, but literally that is the game changer. Documenting. We do so much as business owners that I know it's like pulling teeth, but we have to document. So reduce your taxes by reducing your taxable income. So you remember when I mentioned in the beginning, whatever our revenue is, it's minus the expenses, and we pay taxes only on the profit. There's no way y'all about to come and talk to me or your tax accountants and show them all this money you made and you don't have any expenses, because it takes money to make money. So here are just some common legitimate deductions that you guys can take advantage of. The home office, mileage or actual vehicle expenses. So that's that right there, y'all. That one gets tricky because a lot of people don't understand that when you are writing off your miles, you can't tell us that you had to buy new tires or get an oil change or do some engine work, because the miles weigh really, really heavy. I don't know how many people in the room depreciate their vehicles because they drive a lot. But y'all, those miles, they help us out so much. And it isn't, normally what happens is you get 5 years to depreciate your vehicle, track your miles, and get that over so that you are able to maximize that deduction. After those 5 years, it's actual vehicle expenses. So that's when you load me up with all your gas receipts. That's when you load us up with all of your, you got new tires, you got transmission service, you had all these things. And I'm gonna just guide you one, in one way, depending on where you are. If you're at that 5-year mark, you've depreciated your vehicle for 5 years, wherever you're getting your vehicle serviced, change the invoice name to your business name if that is the vehicle that you are solely using for business. So if you get your vehicle serviced at Acura Carland, or you get your vehicle serviced at Lexus, go up to the desk. This is your business vehicle. This is the vehicle you do most of your business in. Go up to the desk and tell them to change the invoice name in the system to your business name, and let it be care of Teresa, care of John, but change the account so those receipts say the business name. If this is your business vehicle that you are operating, and we are using actual vehicle expenses over depreciating in miles. Software and subscriptions. Every month, I invest in some new AI this, AI that. And I'm pretty sure y'all probably do too. Add it to your Excel sheet. Add it to your Google sheet. Make a note of it, because every software and subscription, we writing it off. Marketing and advertising. If you paid Google ads, if you did a TikTok ad, if you did, you got somebody to come outside and turn a sign, any of those things that you invested in, please document it so you can write it off. Contractors and payroll. Ooh, this is the sticky one. If you have contractors, put a contractor subcontract agreement in place and document it. Okay. Professional services. So every time you file your taxes, pay for a quarterly session, anytime you legally had to, get some documents reviewed, got an attorney, any of those things, document it. We're not forgetting about this money we spending on our business. We are documenting it. Equipment and technology. Any new gadget you didn't purchase off TikTok, because y'all know TikTok will get us business owners. Get this, it's gonna help you shoot better content. All of those things that we're incorporating in our business, document it, drop a voice note. And if you got to go back through those voice notes and check it out. Just get in the habit of capturing and track the expenses real time. The deductions are lost. Deductions lost are money donated. I said it again. I know y'all tired of it, but I'm going to say it until y'all understand that if we don't document, we donate them. Now, if you take your phone, or if you're not on your phone, I'm going to drop the link in the chat. What I did was I took all the resources. Let me see here. All the resources that I have found helpful or that my clients like to use, and put it on an Excel sheet for you. So we got QuickBooks. I know QuickBooks can be intimidating. So try out Wave, try out Zoho Books. Last week I got Monarch and I sent it to a client. My client, her husband, fell in love with it. So now it's on my sheet too. Thank you for that. Gusto, ADP, Paychex. Now, if you guys are needing any personal relationships there, I can support you with that. I have been partnering with Gusto and ADP for quite some while. Paychex, I don't use them as much, but if that is someone in, a company that you like after you do your research, you guys feel comfortable in reaching out, and I can connect you with the person that actually can remember your name and call you back, because that is important. Different payments, Square, Stripe. But some of the receipt capture links I want to share is Dex, Expensify, and Ramp. And then the online banking for us that don't get a chance to make it in to the branch. You got Found. They have these cute little pockets. Some of my clients use those. And you could separate the money. You even can have a digital card for each pocket, which is really, really cool. Then you have Lily. Lily was the account I mentioned to you guys earlier, where depending on your structure, if you have partners, you guys can have separate accounts inside of the same account, which is super cool. Mercury, I just started using Mercury, so please do your research. Relay, All of these though have expense tracking. So if you're doing anything for the business and you got a habit of swiping before you think, move some money over there and swipe there first. All right. Now, next, I shared a monthly expense tracker with guidance and then also tracking. I can't ask y'all to document and put stuff down and categorize it and not help you out. You know what I mean? So, what I did was giving y'all a little guidance here, try to keep it easy and digestible because I know y'all don't like to read a lot. I don't either. But to make it easier, here's something that you can do yourself. And you just take the time, just put it on your calendar, check yourself, hold yourself accountable. And when that alert come up, make time to do it. You guys will be so happy at just how much you are not donating to the IRS by documenting. All right. And that's pretty much it for me, you guys. I think I got one more slide, but it's just me. And you guys feel comfortable and just connecting because I believe in building the business and then building the structure behind it before you scale.
Well, I want to say that since there's all this talk of donation, if they want to donate, they are more than welcome to donate to their most favorite charity, the John Pascal
Absolutely.
charity.
Absolutely.
So if you're going to donate to anybody, donate it to me.
Right, right. If we don't choose, then we're going to donate it to the IRS. And I know that's not what we're trying to do. I know we're not.
They can donate it right to me, and they can be happy to know that their money made me so happy and made me feel wonderful. So they can
Yes,
always feel good about that.
yes, y'all. If y'all want me to go back to this QR code, or if you want me to put the link in the chat, I can with all the resources. Let me do that.
Put the link in the chat.
And y'all test it to make sure y'all can access it for me. Hold on 1 second.
So I put this is a Meet the Money event we have going on Friday. I put the free link in the chat a little bit ago. So if you click on that, you can register to attend free, but that won't get you into the Black Expo. That only gets you into our event. So yeah, just click on that link. And let's see, I'm thinking about next week. Any questions? I think there's something in the chat here.
Oh.
Oh, you put that in there, Eve. Okay. Okay. All right. And then next week, we're going to be doing capital readiness, preparing for lenders and funders. So one of our subject matter experts, Chris, is going to be here to talk about that. So any questions for Eve today? John, anything out there?
I don't see any hands raised or anything. All right, y'all. This is the time to ask these type of questions. You're gonna be stressing out next month,
Mhm.
trying to run around, and you're gonna be reaching out, going, "Hey, who was that person y'all had on there?" So let's go ahead and ask these questions now. Make sure you grab her information because you're gonna need it to make sure that you can reach out and connect and get that help that you need. So
Hey,
it's so
hey,
vital,
John,
so
can you hear
important.
me?
I can.
Oh, great, great. I have one question.
Mhm.
She talked about collecting sales tax, and
Mhm.
I am not collecting sales tax, but you mentioned that we needed to register to collect the sales tax. Where do you register at? Or how do you register? Or should I
So
go ahead?
I apologize about that. You can register with the Georgia Center. Let me drop the link for you. Hold on 1 second. You also can make sure that you, if you're using like any merchant sales or anything where you are able to add it, go ahead and
Mm-hmm.
add it. Just add it. So that you can cover it and it's not all coming out of your pocket.
Okay. All right. Thank you.
Thank you.
Any other questions? Any other questions?
I do have another one. For you listed some some sites that we can go to. About the receipts, you said that we have to have the receipts, and I do, and I keep good records. But is there a software where we can scan them into and it can categorize it for us?
Yes, yes. So on the documents sheet that I shared, you can use Ramp, you can use Dext, you can use Expensify. Any of these online banking apps give you the opportunity to also take a picture of it and capture it, and it reads it based on the business. Now, some of them, if it's a local business or like a mom and pop business, you may not be able to, you might have to help it categorize it. But for the most part, it understands a lot of this technology now. Is incorporated with AI. So it understands what it is, and then you're able to take a picture of the name or the amount, it will scan it, and you'll be able to have support with capturing and categorizing.
Okay, great. Thanks so much.
Absolutely.
All right. If there's no other questions, Eve, I want to say thank you so much. I appreciate you coming in and doing this. Taking your valuable time to educate our people and give them this information. I pray that they connect with you so they can be prepared and be ready. Because again, we don't want to be that person who lets the engine break when we could have been getting those oil changes. So we want to make sure we're doing that.
It's a
And
pleasure. Super happy to be here.
well, thank you so much. And I've been harassing you to pull you into some other stuff that we've been doing. So, y'all know I bully folks. I bully them into helping and working with Urban League. So, I put her in a headlock and drag her to some of the stuff we do. So you will be seeing her around a lot. So but again, thank you so much. We appreciate you, appreciate your time. And everyone else, y'all enjoy the rest of your day. Have a great, great Wednesday, and we will see you next week.
Okay. Thank
Don't
you,
forget,
guys.
Meet the Money People, Friday, February 20. Meet the Money People.
Okay.
Make sure you
Thank
be
you.
there.
Thank you. Bye, you guys. Bye for now.
Y'all have a great day now.